Unreal. Give me 1 second.
If I didn't care about my life and bills, I would have put 10 grand into it.
Huh?
If I didn't care about my savings, my life, and my bills, I would have put 10 grand into it. Called it a day.
All right, so I mean today, for the most part, the thing is like, let me say this. So when there's a lot of news that's going around, right, you kind of have to shift your thinking, right? Because every day, every week is different. So the way to approach things is basically depending on what happens that week, right? Price action wise or news wise, you kind of have to have, you know. So let's say, like I said earlier in the group, whoever's in the group, I'm like, okay, so earnings this week, right? You shouldn't be aggressive in your trading, right? You should kind of go and be a little laid back and go light, right? And then next week, for example, if this week has if we go on a little run this week, right, and the whole market looks bullish and the outlook, like news wise, there's nothing really going on that's gonna push the market down, right? Then and only then should you be a little more aggressive with your trades. What people don't understand is like people want to be aggressive every day. Not even just aggressive, people want to make money every day, right? So let's say let's say you make $500 today, or let's say you make 1,000, 2,000. So okay, you're like, yeah, I made 2,000 today, I'm gonna do it again tomorrow. You see, that's the wrong mentality, right? You can't just be like, all right, I made 2,000 today, I'm gonna make 2,000 tomorrow. Well, the thing is, you didn't know if you were gonna make 2,000 today. First of all, right? It just happened. Right? No one knows how much they're gonna make. So with that being said, don't expect something to happen and be foolish enough to let's say hold your trade until you hit that dollar amount, right? Because every day is different. The market it's gonna move differently every single day. It's not gonna be the same, right? Like today has been like this whole week, this past 3 days, it's kind of been the same every day. It's just sideways, slow. I don't know if you guys know about the coronavirus and everything else that's going on. It's like it's affecting the market, right? The reason why the virus is affecting the market is it's affecting China. First of all, it's affecting China a lot, right? Because cities are being quarantined, right? People can't go out of their house. People can't go buy stuff. So how do you think that's going to look for the Chinese economy, right? And then when you think about the Chinese economy, we have a relationship with them, right? The U.S. has a relationship with them. So why wouldn't this type of news, right, which is only getting worse, right? Every update you see on the virus, it's like, oh, more people are dead, more people are infected, right? So the worse it gets, the worse it's gonna get for the economy, right? I don't know if that makes sense to you guys, but if people can't go buy stuff, businesses don't make money, right? For example, if China's virus, gets out of hand to the point where it's like it's uncontrollable, right? Do you think all these different countries would want a relationship with China in terms of like goods, like food and stuff? Like, do you think we would want to have food that are shipped from China to America and risk Americans getting the virus? Or let's say right now, the airlines, right? The airlines are, you can't really, what is it? The airlines, what they're doing is they're more strict about it on who they're letting in from China, for example, right? So with that being said, if like for example, this virus, who's gonna want to go to China right now with this going on, right? I'm pretty sure not a lot of people would want, if they were planning a trip to China, I'm pretty sure they're not gonna want to go there due to this virus, right? So that's hurting the airline business, right? They're not making money. So understand that there are a lot of things that are affecting the market, and you have to pay attention to it. Pay attention how the market reacts to it, right? It's not just about reading a chart and seeing where the price goes every day, right? If you plan to trade today for Tesla tomorrow, or for let's say Boeing tomorrow, right? And some bad news happens with Boeing or whatever the case may be, then your plan might change. You're not going to have the same plan because, you know, something got in the way of that. So now you have to switch up your plan, right? Same thing with like the overall market. If the overall market, like if I'm looking at the futures right now, it's, you know, where did we close off today? Open here, close around here. Yeah, so the futures kind of went down. So what do you guys think is going to happen tomorrow, right? If the futures keep dumping, then obviously tomorrow at open, everything else is gonna gap down. So if you had a bullish outlook today, it might not be bullish tomorrow because of something that happened after hours or pre-market. So never have a biased consensus of whatever it is you want to trade. Like Tesla, right? Tesla today, you know, I'm pretty sure a lot of people bought calls near the end, but look what happened, right? Price, the price dipped from at an hour before close, right? I'm pretty sure people bought here at 589, hoping to hold it to earnings through earnings today, right? But they literally lost a lot of money from, you know, from 589 all the way down to 577. So it's like you got to understand, like, also the market is not your friend. Like, you don't know what's gonna happen next. It's all a probability game. It's all about probabilities. That's all it is, right? And being able to execute through the probabilities, right? You don't know what's gonna happen. You don't know if it's gonna break. That's why people, like, if you are risking too much, you're gonna start getting all emotional about it. You're gonna start panicking, right? You shouldn't panic in a trade. You should, you know, I don't want to say be carefree about it, but you should, you know, not feel panicked when it goes against you, or not feel too euphoric when it goes your way, right? As soon as these feelings kick in, it's not a good sign. Like for me, you know, I say this a lot. If I'm down 5,000, if I'm up 5,000, if I'm down 5,000 or up 5,000, you won't be able to tell if I'm up or down. Like, it's just, you know, it is what it is. So with that being said, when you guys enter your next trades, make sure you have a clean, a planned entry and exit before you get in. So if you're looking to get in at a break, and the potential profit target, right? So you can use the resistance, right? The next resistance as your next profit target. And if you, let's say if you get in Tesla at 590, right? And your profit target is 595, then make your stop loss, you know, 587.50, right? So now you have, you know, sort of like a 2-1 ratio, right? So you're gonna cut if it goes down to 587.50, but if it keeps going, you're gonna let it run to at least 595, right? If the price actually shows that. You know, you can always cut earlier based on the percentage that you're up. So don't, you know, like this is a big mistake that people have, that I make sometimes too. You know, sometimes I'm not patient enough to get into something, and I try to get into it, you know, a little too fast, to where it didn't confirm the direction, right, the way I wanted it to, and my trade just goes against me. So that's the thing, is that is one key thing. Is two, people are always asking, like, okay, so I have to wait for confirmation. When is it confirmed, right? What time frame do I look at, right? Well, that depends. That depends on how the level looks. Like, for example, for Tesla here, if you guys see my screen, if you see this, this resistance, it tested 2 times, right? 2 times on the 1-minute chart, couldn't break it. If it couldn't break it on the 1-minute chart, if I'm looking at the 1-minute chart, I'll stay on the 1-minute chart, and then I'll wait for a candle to close above the line, right? Plus volume. If you have if you have a breakout and you have a candle that closes above the breakout plus volume, then that's three different confirmations that you have, right, for you to get in. So you shouldn't hesitate on getting in. You shouldn't you're not. This means that you're actually not, I don't want to say like dedicated, but you're not committed enough into this, into your trading, to see for yourself what the price is doing, right? Because you know if if you've traded and you've done technical analysis, then you should know that volume, especially if you're in the group, right? Especially if you've been listening to me all this time, right? I always say volume, breakout, confirmation, enter, right? So, you shouldn't be asking these questions. Like, look at this volume, right? This volume spike, right? So all you have to do now is execute and let it run. Okay, let it run. Let your money work now. Like, now it's time for you to let your money work. Now, if the price ends up breaking back down, then that's when you should, really look at the price action. And then if it hits your stop loss, right? If it hits your stop loss, this is the thing. This is the hard part too. Sometimes it'll hit your stop loss and then it'll immediately go back up. And then you're like, oh, shit, I cut it too early, right? I cut it too early. I shouldn't have cut it because then now it ran up $10. No, it's a good thing you cut it at your stop loss, because what you're doing is you're following a system, a plan, right? Sometimes the system doesn't go your way, but sometimes the system saves you, right? So in this case, if the price had kept going down and you were waiting for, a confirmation that it closed below your stop loss or whatever, now you're going to end up losing money, right? So in my opinion, there's a difference. If you're going to wait, if the price gets to your stop loss, then you should cut it immediately, right? Because the key thing here is to minimize your losses, right? But when it comes to, entering something, it's good to have a confirmation, right? A confirmation on the candle. So a close above the breakout level. Is this making sense to you guys?
Yes, sir.
All right. So always wait for confirmation when you enter something. But if your stop loss hits, right, it's different for everyone. It's different. It also depends on how much money are you trading with in that particular trade, right? If, let's say, I have $5,000 and I get into Tesla, and let's say, for some odd reason, Tesla's premium was only, $2, so I'm only paying $200. So I'm risking $200 on a $5,000 account. So already understanding how, how price action works or whatever. If my stop loss is $2.50 below my entry, then if it hits the stop loss, I'll probably be down around like let me say like $30, right? $30, $40. Now, when you compare that to your account size, right? You're like, okay, now you think about it like this. If you have 5,000 in your account and you are down on your trade because it hit your stop loss, but it hasn't closed, that candle that specifically hit your stop loss hasn't closed yet, then it's kind of okay to stay in there and try to see if it kind of closes above, because you're down $40 on a $5,000 account, so it wouldn't hurt that much, right? But let's say you have a $5,000 account and you get into let's say you get into 10 Tesla contracts. Okay, let's say you get into 10 Tesla contracts for 2,000. So now you're risking 45% of your account on one trade, right? Some people do that. I don't, I wouldn't do that, right? But you can't stop people from doing whatever it is they want to do, right? Because at the same time, at this point, it's like, you think how you think, I think how I think, right? So if you're risking 2,000 on a $5,000 account, if the price goes against you and hits your stop loss, you need to cut that immediately, right? Because sometimes what will happen is the price will keep on tanking to the point where you can't even fill your sell order, right? Now first when it hits the stop loss, you're down like $300, $400, and then now everybody else is selling off and you can't fill your order. So by the time it gets filled, like you're over here pressing the button, trying to fill it, price keeps going down, and then you end up selling for like $1,000 loss, right? So now you're down $1,000 on a $5,000 account. Now you're down, what is that? 20%, 25%. That's a lot. So always know how much you're gonna risk. It doesn't matter. Like, never ever think about how much money you want to make that day, right? If never have an X amount of how much money you're expecting to make. Like, don't come into the market saying, "Hey, market, I'm gonna go make $2,000 for me today. I'm gonna go make 5,000 today." Some people will be like, "I want to make 1,000, but I only have 200 in their account." Like, are you serious? Like, people don't understand the concept of, like, the more you put in, the more you get out, right? The more you put in, the easier it is to make more money, obviously, right? Let's say you have $100,000 account and you're trading, and every trade you get into is like 5,000, 10,000. All you really need is a little bit of a spike, right, on the price, and then you're already up like, 1,000, 2,000. So then at that point it becomes easier. But let me tell you this, even with the big account, if you're the type of person to be, kind of be too emotionally vested into trades, right? You can people blow up their big accounts. I've seen people blow up big accounts. If you guys go on like Wall Street bets, like, these people, they win big or they lose big. When they lose big, they lose their whole account because they're just, putting everything in. So the name of the game is, I don't want to say survival, but you got to be able to, if you can't put yourself in a position where, you can get into something, right? Then what's the point, right? If you're just forcing trades left and right, and then you're left with no more buying power for the day because you couldn't wait for confirmation, and now everything else is soaring, then you've just wasted your time, and you probably lost money that day. So it's important to be patient, and it's important to wait for certain market conditions before even entering. A lot of people don't get this. Like, sometimes it's good not to trade that day, right? Sometimes it's good not to trade, right? Because if you're forcing a trade, what you're doing is you're planting a seed. You're planting a seed that's gonna grow, right? What you're doing is, if you're forcing trades left and right every single day, you're planting a seed, and then next week you're gonna do the same shit, and that seed is gonna grow, right? It's gonna grow into a big fucking tree, right? Once that thing grows into a tree, it's not gonna be a big tree. It's not gonna be a fruitful tree. Let me tell you that, right? You're gonna get a lot of bad apples coming out of that tree. right? So what you should do is you should create good habits every day, right? Following plans. If it doesn't, if it's not in your, if it doesn't go with your plan, don't trade it. I don't give a fuck if it went up $100 today, right? Understand, people get this like FOMO. They get so like, oh my gosh, Tesla's up $50 today. Well, why didn't I get in? Right? Why didn't I get in? So they end up having this like, this fear of missing out, and they end up, they end up they end up entering it so late, and then they lose money, right? So understand that big market movements happen like it happens every week. There's at least like one name that just shoots up out of nowhere every week. You're not missing out on anything. Like this month of January, it's been a long month, right? But we saw Amazon, Google, Roku, Tesla, all these names just kill it, right? On different days, right? Not on the same day, on different days. So there's 11 months left. Remember this. There's 11 months left of this year. Okay, 11 months. Let me show you guys some numbers, all right? Okay, so there's 252 trading days in 1 year, okay? 252. Now, if you're looking to be like a long-term trader, like I don't want to say long-term like 10 years, 20 years, 30 years, but if you're gonna look to be trading for the next 5 years, right? Let's say your starting capital, let's say you know what you're doing now. Like, you have a system that you follow and it works and you're pretty good at it, right? Let's say you start off with like a $10,000 account, and you want to grow this account, right? You want to grow, of course, you want to make money, right? So there's 252 trading days in 1 year. If you're looking, you should have like a little, for me, I like to look at, I like to think long term, like, okay, what can I grow my account to from now until for the next 5 years? Okay, for the next 5 years. So 252 times 5, that's 1,260 trading days, right? 1,260. Now, if you have a $10,000 account and you're averaging, let's say on the low end, right? On the low end, let's say you're averaging about what's a reasonable amount on what's a reasonable profit average daily on a $10,000 account? I want you guys to answer this. I want to see what you guys think. If you have a $10,000 account, what is a reasonable average daily profit every single day on a $10,000 account? So this is like including, including the losses, so this is considering you know how to minimize losses and you know how to let profits run. Let me say that. So on a $10,000 account, yeah, 200, let's say 250, right? 250 to 300. Let's say 300, right? 300. So 1,260 times 300. That's $378,000, right? That's $378,000 in 5 years. Okay. Now that might not seem like a lot, but let me tell you this. So that's considering you make $300 every day for the next 5 years with your account. But understand this: after the first year, right? Let's say from 252 days on a $10,000 account, and you make an average of $300 a day, right? Including the losses, and so you're taking a weighted average for at the end of the year. So 252 times 300, that's 75,000. Okay, that's 75,000. So now your account is at 85,000, right? So now write this, right? Write this. What do you think is a reasonable average profit average for an $85,000 account? on an $85,000 account, what do you think is a reasonable average that you can make in 252 trading days, including losses? $85,000. So let's say 85,000. I hope some of you guys can see that there is a chat button here, so that's what people are typing now. 1,000, 1,000. Some people with the $200 account are expecting to make 1,000 a day. That's the hilarious part. You guys say 1,000, but some of you guys are here. Yeah, you got like 1,000 in your account and you want to make 1,000 today. Like, that's fucking hilarious. So 85,000. Let's say by 5. Okay, let me say let me think like, let's say 3,000. Let's say 3,000. Okay, that's to be safe. This is to be safe. Okay, so 3,000, 252 trading days times 3,000. That's 700. Listen to this. Okay, that's $756,000 in 252 trading days. Okay, let's lower this to 2,000. Even if you lower it to 2,000, right? 252 times 2,000. Okay, let's say you lower it to 2,000. So second year, you're averaging $2,000 a day with losses on a $5,000 account. You're gonna make 504,000 that year, that trading year. 504,000. So your 10,000 account, your $10,000 account is now at 504 fucking thousand, because you were patient and you didn't, you weren't quick to be deceived by other people who are posting mad profits, right? So now you made $504,000, right? So now with a $500,000 account, what do you think an average is per day that you can make? Someone said 5K, someone said 5K. Okay, let's do 5K, right? That's just like on the low end. Some people, you understand. So understand this. I'm not taking into account the days that you're gonna have when you win when you win big, right? When you just hit big, or you make 40K in one trade, 30K, 20K, right? So let's say you take an average of, so now we're going to the third year. Now you're going in with 500,000, $500,000, right? For example, and you're making an average of, let's say, 7K a day, right? $7,000 a day. 7,000. Okay, no, let's do 10,000. Actually, let's do 10,000, because that's 10%. Tell me 2%. So 10,000 times 252. That's 2 million. Right? You guys might think, oh man, that's impossible. What do you mean that's impossible? I just fucking, this is a doable goal. Okay, this is a doable goal. This is definitely a doable goal. This is a doable goal. So now on your third year, right, you're at 2 million and a half, 2.5. Okay, 2.5, and all you did was you started from making, you started from making $300 a day on average with 10,000, and now in 3 years you're at 2.5 million. So I'm showing this to show you like the importance of patience, right? The importance of patience and the importance of just following your rules. Okay, these trading goals. It's not like it's everybody. It's not like everybody's gonna achieve this goal, but it makes sense, right? It's logical, right? It's logical. All it is it's math, right? So if let's say you have, let's start with, okay, let me give you guys an example, right? So let me give you another example. I don't know if you guys saw, but I used my girlfriend's Robinhood. I had 300. I put in $300 in there just to see if I can swing some stuff, and I turned that 300 into 2,400 in a week and a half, with just swings. So, if you have, let's say, $300 on your trading account, okay? Let's do the math on a smaller account, right? So $300 on your trading account, and how much you guys think is a doable, is a reasonable average on a $300 account? Big O said $20, but who the fuck is really gonna be happy with making $20 in a day, right? That's the crazy. That's the realistic aspect of it. It's like you have a $300 account. A lot of people, they're not happy with making $20 that day. They're not. Trust me, they're not. That's something that they have to fix for themselves, right? They got to think long term. So $20 is, let's do $20. $20 is cool. It's whatever. $20. So with the $300 account, you make $20 a day in 252 trading days, right? You're at 5,000. Okay, you're at 5,000. And then from 5,000, right? From 5,000, obviously, like, I'm pretty sure after a couple of months, weeks, right, you're gonna start adding more money in there. You save up more money, and you're gonna make more money, right? So let's say from 5,000, you add like 2,000. So now you're at 7,000. Okay, at the end of the year, right? 7,000, and let's say you make an average of $150 a day on a $7,000 account. Now you're at 40,000. So in less than 2 years, you just turned 300 into 40,000 in the safest way possible in the market, right? I don't like the word safe, but I'm using like a reasonable percentage here. So now going from 40,000, now you have 40,000 in your account, right? You make, let's say, 1,000 a day for 252 trading days. Now that 40K is going to turn into 252K, right? So it's all about patience. It's all about just waiting, just waiting for the right time, waiting for the right setups, entering high probability trades, and if it doesn't go your way, you cut it, and then having a system, and then being able to take profits when you need to, right? Not when you want to, but taking profits when you need to. Okay. Like, let's say if I'm using a 50K account and I'm already up 3K, like, I'm fine with that. Like, I'm, even 2,000, 500, 1,000, money is money. I'm okay with that because I know I'm in it for the long term. And if I can create, a system where I can be consistent, right? It doesn't matter how much I make today. What matters is how much I make for the whole year. You can literally make 10,000 today, but at the end of the year, you can be down 40,000, right? So don't be fooled on that. People will make 20,000 a day, 10,000. Next thing you know, they blow up their account the next day because they're using, they're not. You guys know what I mean?
Yes.
What I say is just focus on your own trades, right? Focus on your own trading. Focus on your own account. Focus on growing your own account. It's just, that's all it is. And if the trades don't match up with, your conviction, then don't get in.
Hey, Kevin.
What's up, bro?
Did you go over Apple already?
No, not really. I mean,
hey, can you go in the 4-hour chart?
What about it?
Isn't that a bull trap?
It looks like it. I mean, I don't know. It's like, it's not even like Honestly, I can't even say it's bullish or bearish, bro. It's like,
I heard they beat expectations, but on the news it showed. I had it pulled up, but there you go. They have to
yeah.
pay
So,
some fine.
so look. So the bottom line is like, we don't know what's gonna happen tomorrow. Okay, you can't be like, okay, this shit's bullish. Like, it's gonna
Yeah.
go up tomorrow. It's gonna go down tomorrow. All we should do is just have these levels set up, and then get in when it's time to get in, right? And then see where it goes, right? I don't care if Apple goes. I don't care if Apple goes to shit or goes up tomorrow, right? I just know I have these levels set up to
Yeah.
where once the levels hit, my system comes into play, right? My system comes into play, and then I follow the system, right? Now
Yeah.
I follow the system. So if Apple breaks, 325.10 tomorrow, with some volume, then I'll get in, right? I'll make the profit target 327.90, right? 327.9 would be the profit target. And I would set my stop loss at maybe around like $1 down, like 324, say, 324.50, right? Because then I'm cutting my losses, and what I'm doing is I'm just letting my profits run and cutting my losses as soon as it hits that point. So when you do that, you're creating a habit for yourself to where every single day, you're going to be obligated to follow the system, right? Your system. So just have a system in place. We can all use, everyone here probably, because, I'm always talking about this. We all probably have the same system, but it's just what's going on individually within our heads that's messing up your trades, right?
Yeah.
Like me and you, we can have the same system, but if I'm better at managing risk than you are, who's gonna make money at the end of the day? Me, right? So you have to really kind of, I don't want to say dig deep, but just think about your thought process, right? What you're thinking that day, like why you're getting into the trade, right? Like for me, every single time, every time I lose or make money, I try to reassess myself, like, why did I lose money today? Or why did I make money today? What did I feel? What was I feeling? What was I feeling when the price hit my stop loss and I let it keep running? Was I being hopeful, right? Was I being hopeful that it's gonna go up, right? Because then if I'm able to, if I'm able to find out what it is that I was feeling, and if I'm able to, figure out how I was feeling that day, then I'm able to eliminate that, right? I'm able to not make that same mistake again tomorrow. So tomorrow, what I'm gonna do is if it goes to my stop loss, I'm gonna cut it immediately, no matter what. I'm not gonna let it run or be hopeful that it's gonna go back up again, right?
Right.
So the thing is, the good thing is, right? Every one of you here, like you guys trade every day, right? So even if you've built a let's say, even if you created bad habits for yourself, you know what those habits are. You already know because you do them every day, right? So if you're listening to this right now and you have these bad habits of letting it run too much, expecting too much, and not taking profit when you should be, or if you're letting your losses, go down too much, right, and not letting it and not cutting it when you're supposed to. So then you've identified, right? You've identified your flaws. So now tomorrow, right, have a better system put in place. It doesn't matter if you lose or win tomorrow. All you know is you followed your plan. Okay, you followed what you were supposed to do. You followed what you intended to do, right? Now what you're doing is if you do that, if you keep doing that every single day for, a week, 2 weeks, 3 weeks, a month, you're going to develop a habit to where now you're going to refuse to hope, right? You're going to refuse anything else that's going against your system, right? Because you've built a system that works for you, and you're in this for the long run, and you know what I mean?
Yeah, man.
You're going to use that system to grow your account, right? It's literally, for the most part, it's all like psychological and like planning, like being able to manage risk, being able to plan a trade. You know, when I say plan a trade, you don't have to spend an hour looking for something to trade the night before. Like, yeah. It'll take me like 3 minutes to find something to trade tomorrow. Like, I'll just, you know, like for example, let me see. Google, no. Facebook. I might trade Facebook tomorrow because it took a big dump today. So I want to see how. And there's hard support here at 204.3. So that's going to be something I'm looking at. So if it breaks that level, I might look to keep shorting, because then at that point, I just feel like it's gone down to a point where people are either going to keep selling it off, or people are going to buy this dip, right? Hopefully people buy the dip, because then everything else will, you know, if people buy this Facebook dip, then I'm pretty sure the whole market's going to be green, not just because of Facebook, but because of the overall market sentiment. If the overall market sentiment is bullish, everything else should be going up. If overall market sentiment is bearish, then everything else should be going down. It's a matter of waiting for the right time to get in, getting in at the right time, and getting out at the right time, right? So
Right.
if this is why it's also important to figure out the range of the stock for the day, right? Like, find out what the trading range for whatever it is you want to trade. So if I'm trading Facebook, then I know it has a range of around like $3-4 a day, right? So if it's already moved like $3.50 to the downside, I'm not gonna go ahead and you know, buy mad puts, because I only have a 50 cent. It's 50 cents away from the end of the range. So what can usually happen is, like, people get in too late, and then they get into the point where it's already hit the other side of the range, and then the price goes back up, or it goes the opposite way, and then they you know, they wonder why. Well, it's because you got in too late. You know, people might not think that just because you got in Facebook after it's dipping $4 or $5, they don't think it's too late. Well, no. On average, Facebook only moves about $3 to $4. So why would you get in puts when it's already down $4 or $5?
Yeah,
Right?
that's
If
true.
it's down $1, if it's down 50 cents, then yeah, sure, because then it has room, right? Because these levels are where people are sitting to buy. So when Facebook hits, you know, people are like, other people have systems in place too. Like, they're like, all right, when it hits here, I'm gonna buy this dip. You know, we're not the only ones with trading systems, because what you're doing is you're trading against other people, but for the most part, you're literally, it's like a war between you and your own mind, right? So Facebook is definitely something I'm going to look at tomorrow. Let's see another one. Roku doesn't look too good, so I'm going to skip that. UNH, knock. Like, knock. This looks good for tomorrow. It's in a range. I'm just going to do this right here. It's in this range, and it might break out to the upside because it had a lot of buying pressure today. It dipped all the way down and went all the way back up. So knock, I might swing that. Let's see, what else? Limit. Home Depot. Home Depot is pretty strong. I think it can just keep going back up. It's just moving with the market right now. So with a lot of this, you know, market, a lot of this news is really affecting these names. So, like I said, for people who got in here late, just understand that sometimes it's good not to trade, you know, that day. If you don't find something good, don't force it. You know, people really, really don't understand, like, you know, you don't have
They
to
get
make money
greedy.
every single day in the market. You don't, because sometimes the opportunities don't present itself in the form that you wanted to, right? So what happens is people try to create opportunities instead of waiting for them. So then they get fucked, right? They get punched in the face because they're trying to make a trade work, you know, you're just hoping for it to work. You're not following the system. Nothing is, it's not confirming a breakout with volume, whatever, right? So just have a system in place, right? And just be aware of everything that's going on, right? Like if you're in the live room every morning, right? You can tell that today, like we didn't trade shit, right?
Yeah.
And that's for good reason, right? Because if I had called like literally, if I had called like 10 different names today, then everyone would have lost money, right? So, I don't care if people get mad at me for not calling things out. I know when to not call things out because I can see the market is shit. So if I call things out and someone gets in 3 minutes later, right, and I've already got in for 3 minutes and I got out and they barely got in and they lose money, who are they gonna blame, right? They're gonna try to, you guys know what I mean? Like, some people don't know how to blame. Like people won't blame themselves, but they'll blame like the market or other people, or like, yeah, oh, he told me to buy this, he told me to buy this. You know what I mean?
Yeah.
You shouldn't even be honestly, you shouldn't even be following people's trades in general, unless you're looking at it yourself and you see and you agree with it, right? Unless you agree with what's being said. If I tell you to go buy calls, if I tell you to go to buy calls, then you should look in the chart for yourself to see if you agree with what I'm saying, right? I know a lot of people trust me when I call things out, but like, you know what I mean? I'm not a financial advisor. I'm not, so understand that it's better for you to understand how things work and learn for yourself, right? So that when someone like me, like if I call shit out or if somebody else calls shit out, you're able to come to an agreement with that person and say, okay, I agree, I'm going to get in. And then you profit rather than just being someone who doesn't know shit about options or stocks. And you're just like, someone's like, buy this, buy that. Oh, I'm going to buy this, buy that. Oh, yeah, I made 10,000 today. I bought this. Do you even know why you bought it? Or just because somebody told you to, right?
Yeah.
You know what I mean? So it's important to be self-sustainable because then you're in control. That's the key words here. You want to be in control, right? You want to be in control of your money, right?
Yeah.
So with that being said, I'm gonna end this for the day. I hope you guys learned a few things. let me go over like a couple of names real quick. Not go over, but see some good plays for tomorrow, real quick. Just so you guys can look at them.
Kevin, do you mind if I ask you a question?
What's up, bro?
It might be a little, well, it's never a stupid question. It's my first time using Tinko String. I was using Robinhood. And then you keep saying, I don't know why people use Robinhood, so I opened an account like 2-3 days ago. When you placing your support and resistance line, are you placing the line right on the wick of the candle or what?
On the wick. Well, have you seen the video I went over on that?
What was that?
Have you ever seen the video I posted on YouTube that I went over?
Yes, I saw it, but I don't know why, but it looked kind of blurry on my computer.
It's the first one.
So just, bro, use the wick. And if you, sometimes you could use just the body, but for the most part, you're just focusing on the wick because that's the area where, that's like the exact point where it reversed.
Got it. And we're looking between 2 and 3 at least touches, right?
Yeah.
Okay.
2 or 3 or more.
All right. Thank you.
If you're looking at a weekly or monthly chart, you can just go based off of one candle. If let's say you're looking at a high, like this one that I just made, that's the high. So I'm going to make that line, right? Because it's never touched that line before. So just because it's one candle, I'm still going to do it because it's a high. It's an area where, you know what I mean? It's at the top of the chart.
Yeah. And the way that you do is that basically you start from the weekly and then you go to the daily and then you go to the 4-hour chart and then you go to the 5-minute, right?
Yeah. I only go on the 5-minute before the market opens.
After the first half an hour, right?
So look like this. So I make my support resistance on either monthly first, then weekly, then daily, then 4 hour. And then when I want to make support on the 5 minute, I don't do it at night like right now. I wait for tomorrow to happen and see what happens right before the market opens. Because then I take consideration of what happens pre-market and after hours too. Like if tomorrow at 30 minutes before market opens, Apple decides to shoot up $3-4, my line that I made yesterday, yesterday night, is not gonna matter anymore. You get me?
Mm-hmm.
So when you're going to the lower time frames and you want to make support and resistance, I would suggest making it once you see that it's made an after hour or pre-market high, because they always do. Like this on triple Qs today, you see how this is after hours? It made an after hour low, right? So now tomorrow that becomes a support level. If you didn't make this level, then you wouldn't know where the support is, right? So now that's why it's important to wait for the after hour price action to go onto the lower time frames to see what happens, right? What, like right here, see that little candle?
Mm-hmm.
There's some buying there. So just 5 minute, wait for pre-market, after hour, and yeah.
Thank you.
But yeah, I'm gonna end this for today. Hope you guys enjoyed it. Talked a lot about some stuff today.
Good shit, Kevin.
All right, guys.
All right, thanks, man.
Thanks, Kev. Have a good night.
Bye,
Bye,
bro.
Kevin.
All right, night, guys.
See you.
Wow.